that, we need to put the spotlight on Mphasis because it is in focus after reporting their third quarter numbers. ET Now's Sajid Mangat spoke to Nitin Rakesh, who is the CEO and director, along with Arvind Vishwanathan, who is the chief financial officer at Mphasis. Let's go across and listen into excerpts from this interaction.
2.6% QoQ growth to 4,000 odd crores. In terms of US dollar constant currency, it's around 1.4% QoQ. What has been the drivers in this quarter for you?
Good. Thank you for having us. I think growth driven primarily by banking and insurance businesses, at least in Q3, on a sequential basis. On a YOY basis, I think banking, insurance, and TMT also have grown really well. So if you look at the broad themes, I think the investments we've been making over the years in making a lot of our propositions AI first, modernization, AI operations, SDLC transformation, getting embedded into some really long-term programs where clients are looking to embrace the new stack and deal with legacy is really what's driving a lot of the deal making.
If you look at the contract, total contract value for this quarter, $428 million, it's slightly lower than what we saw in Q2 of this financial year. Is that an aberration, or there are certain deals which have not come through because of delay in signing of the deals?
I think you have to look at it from a little bit of a trailing 12-month perspective because the nature of deals are lumpy. We had a bumper first half of the year where we sold more business, or almost 1.2 billion in first half. That was more than what we did in the full year last year. So in the context of that, 428 is still above the long-term average. And we are very happy with the fact that despite 2 quarters of record wins, we are still actually staying above the average. So I think on a trailing 12-month basis, we've done about 2.1 billion in TCV. And that really bodes well for the next few quarters in terms of growth as well.
Can you also give us a sense of how much of these deals have AI as part of them? Because I understand that a large part of this deal has AI-led wins for you.
Yeah, almost 2/3 of them actually are AI-led, and the rest will soon be because it's very difficult to build a proposition which has the right commercial construct and the right transformation construct while being profitable for yourself if you're not really using the new capability set. So I think it's the direction of travel is very clear on that. We've seen an increase in that over the last 12-18 months. We've gone from 20 to 30% AI-led to about 65% AI-led. And I think we'll continue to see that rise over the next few quarters as well.
And the 2.1 billion that you spoke about the last 12 months trailing deal pipeline that you have, again, 60% of that would be AI-led?
Yeah, that 2.1 billion is not the pipeline, but actual net new TCV that we have signed. So yeah, 60+% of that is AI-led.
Okay. Arvind, can you take us through the EBIT margin by 10 pips on a quarter-to-quarter basis? How have you handled the currency volatility and other factors in this quarter?
So I think from a margin standpoint, it's largely been steady. Like you said, it's only about a 10 basis points drop in a seasonally weak quarter with furloughs. I think currency perspective, we have a reasonably conservative hedging policy, right, which we stick to irrespective of volatility. So to that extent, I would say that we are well hedged, and therefore you would have seen forex losses coming in Q3, and I expect that to come through for the next couple of quarters before the full benefit of rupee depreciation starts to flow in. I think it'll flow in over the course of FY27. But otherwise, we've been very disciplined with our margin performance. We've been able to win large deals and ramp up large deals without really kind of putting strain on our margin on back of some of the investments that we've made on tech shifts like the Neo platforms. And so I think we're quite comfortable and well placed within the range, right? We have given a range of 14.75 to 15.75, and we are largely with the bang in the middle of that.
at what rate have you hedged your your currency? Because you're saying that you will take a couple of more quarters before the full benefit of depreciation comes through. So what is the rate at which you are hedging, and are you looking at unwinding some of the hedges given the fact that rupee continues to be weak?
No, I think one of the merits of having a mature treasury operations is not to react to currencies and be very systemic in terms of how we hedge. We hedge on a monthly basis, the monthly roll downs happen, and then we hedge for a prescribed period, right? It's a very programmatic hedging. And, I would say this, I will not get into specific details of what is the exact rate because there is no one rate, right? The rate varies between the months. But roughly the accumulated hedging losses which will get spread at a currency rate would be about 130 crores, but that will get spread out over a 8-quarter period. So that's how we are.
Okay. I also see that your DSO days have also gone up this quarter. What is the reason for that?
So I think, our DSO was 89 in Q2 and gone up to 91. We kind of called it out in last quarter that our DSOs will be little elevated for about, I would say for next 3 to 4 quarters. Largely on the back of some of the investments that we have made on the large deals, right? We expect it to come down, start to come down, over the course of FY27, right? And back to normalized levels. But we did talk about this, that it will be a little elevated for a couple of quarters.
Nitin, your BFS segment has gone up by nearly 3.7% on a quarter-to-quarter basis, and insurance at 9.7%. How are you seeing client demand in this segment, and especially with respect to discretionary spends? Is there some improvement in the way clients are spending?
Yeah, I think combination of a couple of things. Firstly, in general, banks have been in a pretty, tailwinded environment from their earnings perspective for the last couple of years. That means that while they're not opening the spending taps because they're trying to spend, money freely, they're also not, putting pressure on tech budgets because in general, tech budgets will either stay stable or will have a slightly upward bias. In that environment, the ability to stitch deals where you can give them not only efficiency using AI, but also at the same time unlock some longer-term transformation programs. And sometimes you can bundle these together in what we are calling a savings-led transformation construct. That's really what's driving a lot of deal making and uptick in revenue for us. It's giving us the ability to penetrate into areas that potentially we were not really playing in earlier, because those were much more scale and price-conscious areas. But now we are kind of bending the cost, time, and complexity curve using AI.
All right, so that was Mphasis management speaking to ET now, but then time for a short break. Post that, more on stock-specific action.